Good morning. This is Peter Milios from the Finance News Network. Today's focus will be on the European markets as the US was closed overnight due to the public holiday of Martin Luther King. European equity markets finished stronger. The FTSE closed up by 0.2%, whilst the DAX and the CAC finished 0.3% higher. European stocks in particular have benefited from signs of slowing price growth. The roughly 19% outperformance of the MSCI Europe index relative to the MSCI US index in dollar terms over the past 90 days marks the highest return in more than 30 years, according to analysts at Morgan Stanley. This does not necessarily signal the start of a multi-year period of European outperformance, the US bank said in note. However, we think there is a good chance that it marks the end of Europe's persistent structural underperformance post the GFC. Meanwhile, when evaluating the UK's FTSE 100's 0.2% gain, the index is continuing to move to an all-time high, benefiting from the boom in energy and commodity stocks last year. In European sector news, healthcare and real estate led, whilst travel/leisure and basic resources lagged. European bond yields were firmer, with the 10-year gilt up 4 basis points, while the bund was flat. The dollar is firmer, with the biggest move against the Japanese yen and pound. Oil was down, gold was softer, industrial metals were mixed. Futures contracts tracking the major US indexes continue to trade, though American stock and bond markets are shut for the federal holiday. With the futures for the Dow Jones Industrial Average, S&P 500 and the tech-heavy NASDAQ all hovering around flat. And looking at bond markets, the US 10-year was flat overnight at 3.5%. Investors can expect volume to increase on Tuesday as investors pour back into the US markets and continue to focus on narratives that have dominated in 2022 and into 2023. Inflation, interest rate hikes, and recession risk. The week ahead holds more catalysts. On the US economic front, Tuesday brings January Empire State Manufacturing Index, while on Wednesday, data is due on December retail sales, producer price index inflation and industrial production before jobless claims data on Thursday alongside December building permits and housing starts. There will also be murmurs out of the Fed, with Vice Chairwoman Lael Brainard due to speak Thursday and Governor Christopher Waller delivering a speech on Friday. In commodity markets, European natural gas prices continue to slide on a warmer than expected winter. Dutch TTF gas futures for the coming month dropped as much as 15.1% to 54.85 euros per megawatt hour, its lowest level since 2021. Davos starts today with a focus on climate change. The World Economic Forum in Switzerland is a key focus for European markets this week. Heads of states and business leaders mingle with academics and innovators in Davos. The key themes for delegates to debate and discuss are the war in Ukraine, economic instability and uncertainty, and climate change, among other things. According to the WEF's 2023 timetable, more than a third of the sessions are related to the topic of climate change. The word climate was mentioned 35 times in the agenda, more than energy at 27 times, geopolitics at 18 times, war at 7 times, inflation at 6 times, and recession at 4 times. The climate-related talks that have been scheduled touch on a range of topics, including the rising tide of climate litigation, artificial intelligence for climate adaptation, innovative financing mechanisms for net zero projects, and traceability for greenhouse gas emissions data. In electric vehicle-related news, according to the preliminary research from LMC Automotive and EVVolumeSale.coms, EVs made up 10% of all new cars sold last year for the first time. This represents an increase of as much as 68% from the previous year. This was driven mainly by strong growth in China and Europe, providing lift to a broader car market that suffered from economic worries, inflation, and production disruptions. The SPY futures are pointing to a 0.3% fall. Thank you for listening.